The Federal Reserve released the minutes of its last meeting, and it shed some light on two critical issues for the market: inflation and interest rates. Steve Liesman has the details.
Minutes of the Fed's April-May meeting show the central bank is ready to be patient with its policy of patience when it comes to figuring out what to do next with interest rates. The minutes say members of the Fed's rate-setting open market committee believe a patient approach is appropriate, quote, for some time. It's the first time they've characterized a time period around their patience language. Committee members believe the most likely outcome is a continued economic expansion, strong labor markets, and inflation rising back towards its 2% target. Inflation's been running below that target, and the question is whether officials are concerned enough about it to cut rates. The answer in the minutes? Not yet, but maybe soon. Some officials say the downside risks to inflation have increased, and several said they're worried that if inflation doesn't head back up in coming quarters, they're worried that average Americans will start to doubt the Fed really means it when it says it wants 2% inflation. The implication? If inflation doesn't rise towards 2% in the coming quarters, the Fed could well be thinking about a rate cut, perhaps around the end of the year. All that said, there's a small wing of the committee that worries about the other side. They said if the economy evolves as they expect, they could see hiking rates. On the economy, the general view is that growth would slow this year from the 3% pace of 2018, but a better first quarter meant that it wouldn't slow as much as originally thought. The meeting took place before President Trump imposed new tariffs on China, so it won't be until the next meeting in June before markets will get a full view for how the tariffs have changed the committee's outlook on growth, inflation, and rates. For Nightly Business Report, I'm Steve Liesman in Washington.